Today, I will tell you a bit about the UAE itself, about the landscape of the country, about foreign ownership restrictions, where they currently stand. History is really not that important to us. What really matters and what matters is selecting the right structure. I'll tell you about some onshore solutions, some free zones, tax overview, a little bit about what happens in the employment, IP space, AML, and on the GCC note, we will have another expert who will cover the Kingdom of Saudi Arabia, so that part will be addressed later. Well, one of the things that is interesting about the UAE is that it is a federation of 7 emirates. Each emirate has its own emirate-level laws. Each of them is also subject to federal Emirati legislation. But business doing in one emirate means having a license in that specific emirate and only in that specific emirate to conduct business operations. So for example, if somebody has a media company and they would want to do business in Dubai, they say, okay, Dubai is the most dynamic place, let's do it in Dubai. But we also want to do business in Abu Dhabi and have clients in some other emirates, and how can we really go about it? The simplified version of an answer is, well, you should have your business registration in all of those emirates where you want to do business. There is no one license that covers all of the emirates. Service providers who have clients anywhere, in the world, very often actually have one established office, one emirate, and then they actually provide services to clients in other emirates. To some extent, service provision doesn't pose a lot of issues, but of course trading in goods between emirates then really is very monitored by authorities. Now, if we think about the UAE really, and why are we starting this session with the UAE? We're looking at the GDP growth in the UAE, the population growth. I can tell you that when I arrived in the UAE in 2006, and that was my second longest stay because the first time was 2003, freehold legislation was introduced and Burj Khalifa announced. But 2006, the population was less than 3 million people. At the moment, we're approaching 11 million. So 11 million is a small population, of course, in a global scheme of things, but it's a multiplied population of 18 to 20 years ago. And this is why, again, so many businesses and so many of us are interested in the UAE. Infrastructure is here. There is school for kids. There are places for hanging out in the evening. There are great hospitals. There are a lot of potential clients. Time zone is so suitable for those doing business with European clients or with Asian clients, because when it comes to really, the time difference, we're somewhere in the middle. And when it comes to even flying from a country to the other, Dubai and Abu Dhabi have become such huge hubs for travel, right? It's also very easy to travel, from London to Hong Kong via Dubai, for example. In the UAE, what is sometimes of an interest to businesses who are used to doing their operations in other parts of the world is, okay, well, how is business done here? What are the principles? What is the legal system really like? So the UAE itself is a civil law jurisdiction that derives a lot of principles from the Napoleonic Code, not directly through Egyptian jurisprudence. When Napoleon then, went to Egypt in the 19th century, he really then impacted some development of the legislation, but also court systems. And through Egypt then, a lot of Egyptian scholars, Egyptian judges, a number of those influences came to the UAE. There is very little Sharia law that impacts the UAE. Doing business is not subject to Sharia law. There is a lot of conventional banking. There is, of course, Sharia compliant banking, but it's not the only thing that's here. In fact, the UAE's banking system is built on conventional banking that has nothing to do with Sharia. And Sharia principles concern some specific family-related and inheritance situations only, which is very different to some other jurisdictions in the region, where even in commercial companies law, you will see references to Sharia and disclaimers and things like that. But for those who would like to have a framework that's really much more US-like or English law-like, then there are two jurisdictions that are free zones, but they're also jurisdictions themselves, which is not the case for other free zones. Other free zones are only territories with their own framework to some extent, always subject to federal UAE law, but those are independent. Abu Dhabi Global Market, it's a financial free zone in Abu Dhabi, and the Dubai International Financial Center. These two free zones operate in the English language only. They have their own court system in addition to the legislation. They've got the Court of First Instance, they have the Court of Appeal. The proceedings and judges actually are very senior judges from England and Wales, Australia, New Zealand, what have you. So these are the free zones where a lot of businesses actually form their operations, and they have their contractual relations also under those laws. The good news with ADGM and the DIFC is that no matter where you do business in the world and where your entity is, your contracts with your clients, with other business parties, even related party transactions, can be governed by ADGM or DIFC law. So you can opt into those jurisdictions. You can submit your contracts to jurisdiction of the DIFC courts or ADGM courts so that you are closer to the Anglo-Saxon proceeding without having to fly to London, right, if you need to litigate. The main piece of legislation that talks about companies is the Commercial Companies Law of the UAE. It's supported by the Civil Code, so those two really tell us what happens. There are also at each emirate level, there are regulations that really clarify how each specific emirate wants to operate those laws. At the moment, most businesses in the UAE, free zone or no free zone, can be 100% owned by non-GCC parties. And it wasn't like this years ago. It's not a very new phenomenon. It's been around for, I think, a few years now. But now you can form your business onshore or in a free zone, and not being a GCC national, you can own it yourself 100%. So it's very important to always see what benefits you may have, if any, of forming your operation in a free zone. Before, the main selling point for free zones was, well, in a free zone, you're French and you can own your business 100%. Onshore, you're French, you can own your business 49%, 51% would have to be with an Emirati. Or option 2, if it's non-Emiratis, then the whole capital had to be owned by, let's say, 100% Saudi, 100% Kuwaiti, etc. So even if you had a Kuwaiti partner who would want to own 51% the GCC portion and another party that was non-GCC, that didn't work. So, which is why really free zones now are trying to make sure that they are still relevant, because ownership is no longer there, but there is still a number of reasons why specific free zones might be very attractive to you. But don't disregard, in my view, onshore registration of a business, because it might be more attractive in your specific case than a free zone. Now, there is still an element of ownership restriction, so of requirement for Emirati ownership of business, in relation to a very narrow type of entities that operate in the UAE. So if somebody, for example, wants to open a telecommunications company, well, there is a restriction, and that restriction means that the telecom regulator would require that a certain percentage, and that would be then discussed and negotiated, would be owned by Emirati stakeholders, right? If somebody wants to have a manufacturing facility for satellites, right, or military equipment or military servicing, of course, those sectors that are crucial to the safety and security of the country, these are the ones where, unlike many other countries in the world, the UAE maintain requirement to have a certain percentage of ownership in local Emirati hands. And that percentage depends on the sector, on the specific activity, but also it is subject to discussion with the licensing authority. Well, so how do we go about forming an entity? It's actually not really a rocket science. Most authorities have a two-stage process. There is that initial application. You prepare some basic documents. So let's say Omar wants to set up a business. Okay, he says, great. So I share my passport copy. I will need to provide some source of funds documents, maybe some bank statements from any bank in any country. This is what I want to do. Let me say to the authorities, you know, what my business activity will be. I would like the manager to be Peter, my good friend, and that's where the documentation goes for, in principle, that initial approval of the application. Why is there the initial approval? Because in the UAE, across free zones onshore, authorities run CID, security clearances. So they have to vet every shareholder, every manager, and every director to make sure that those individuals are not considered a threat to the national security. And this is why the initial stage is required. Once there is clearance and the initial approval is issued by an onshore authority or free zone, then you can go to the authorities, sign the memorandum of association or articles of association, and appoint directors and finalize that application until you get a commercial license for that entity issued by the authority. Rejection, actually, with that we're mentioning on the slide, happens very rarely. In all those years, with the numerous numbers of clients, I think I've seen one case only where an application actually was refused upon the initial in principle approval. That's the only case. Other than that, it really doesn't happen. Even if it takes time for the initial approval to come through, it's essentially that authorities are waiting for all the clearances, but waiting on its own shouldn't worry you. There is nothing to be concerned about. Trust me. Really an awful lot of applications get approved. The ones that don't constitute, I don't know if it's even 1%. It might be a fraction less than that. Trade agreements and international relations are also something that makes the UAE very interesting because there are a lot of bilateral tax treaties. There are also trade and investment agreements. There are agreements between courts and other courts. So the Dubai International Financial Center Court has an agreement with English courts, with Singaporean courts on mutual cooperation, and those agreements make it easier to recognize court judgments between those different jurisdictions. Well, then, you know, the important thing really is to make sure that before you go and form that business operation, you check which option would be most suitable to you, which emirate, right? Which type of operation? I mean, is it free zone or is it onshore? Is it going to be a business that requires warehousing because there are some goods maybe coming, maybe there is equipment, or maybe not. Maybe it's pure servicing. Maybe a lot of it will be happening online through the platforms, right? And then you don't really need to worry about office space that much. You still need to have it, but it may have to be only very small. to satisfy the minimum requirement. Other than that, you're all set. So there is quite a lot I would recommend that we need to go to that initial phase to make that assessment. Once you've made the assessment, setting that entity up is really likely to be quite a simple process, but that initial assessment is quite important. There are sometimes misconceptions on the market. There are a number of people, and still I think online there are disclosures where somebody says that if you have a business in a free zone, there is no UAE corporate tax that applies to it. That's absolutely incorrect. The tax regime is a federal regime, which means that the rule of thumb is every business is subject to 9% corporate income tax. However, in specific situations, some specific businesses in free zones can qualify as qualified free zone person for 0% tax application. But again, remember, you start with 9% corporate income tax thinking, and then you say, okay, in my specific case, let me check if my business is in a free zone, maybe I would qualify under that exemption. So that potential tax exemption is one of the advantages of free zones that is there now. To say, okay, if you're onshore, it's 9% full stop. No matter how you do your business, where your clients is, where you derive your revenue from, it doesn't matter. But if you do business in a free zone, in some cases you might be able to reduce your tax liability. Now, that one is actually quite important because in fact, depending on what you want to do and how active you want to be in the UAE, you may or may not have to form legal presence here. So if your relationship to the media and telecom industry is based on some agency agreements here, maybe there is some hardware, I don't know, that you're distributing. You don't have to do it yourselves. You can have a local distributor here. And if that's the case, you may not even need to have local registration here. The distributor has that license here, contacts the business, and it's all fine. So remember, there are two ways to approach doing business. A situation where, yes, you will need to have an entity established, registered somewhere in the UAE, but there are also those where you essentially do business in another jurisdiction and then export your service or export your goods to the UAE. That's also possible. When it comes to UAE onshore legal forms of those entities, there are many. So there can be a sole shareholder LLC, there could be partnerships, there are branches of foreign companies as well. Branch is not an entity, technically speaking, it's an extension of another entity, but that's what it is. There are joint stock companies, of course. The most popular form, the easiest to form and to operate, and the one that is not subject to Ministry of Economy supervision and some other things, is a limited liability company. So I would say that in most cases you're looking at an LLC for onshore, but also free zones, because then, free zones also have LLC. ADGM calls those companies limited by shares, and the same is true for the DIFC, who use different term for their LLCs. Here a little bit on those, but the detail really you would be able to even find through publicly available sources or even somewhere on the website of our firm. So I don't want to go into too much details, no need for that. Now, Abu Dhabi and Dubai onshore, I think, sometimes clients say, why Dubai? Why Abu Dhabi? And, well, that's a very good question. I think a lot depends on business relationships, on target clients, on business partners. If you know that there is going to be Abu Dhabi government financing provided, or maybe you will provide a solution to ADIA or Mubadala, I would say by all means have your business formed and registered in the Emirate of Abu Dhabi. You will be closer to the recipient of your service or your solution. But if you do a lot of trading and really, let's say it's retail, right? And then you have a huge distribution potential within the Emirate of Abu Dhabi, Dubai, clearly Dubai. So it depends. The tricky one is if it's true. And then most likely the way to go would be to form the initial operation in one of the Emirates and then start, building it and then add on a subsidiary or a branch in another location. From the moment when all the documentation would have been filed by you with the Dubai Economy and Tourism Office to form an onshore license until you actually get the entity registered, it's going to take you 2 to 3 weeks, not longer than that. It's just that initial preparation that may take you a little bit of time. Abu Dhabi process is a copy of Dubai process when it comes to incorporation. Here we're saying 3 to 4 weeks. Yes, it is a little bit longer. That's because from experience, Abu Dhabi authorities function a little bit slower. They come back with feedback. It's not true for ADGM, by the way. They're very responsive, but if we think about onshore authorities, sometimes, that responsiveness is slower than what we see in Dubai. Well, there are actually over 45 free zones in the UAE, but I can tell you not all of them are worth your attention. Some of them are, some of them aren't. And one of the things that you will learn later today from Victoria, the co-panelist, is how important it is to have your funds actually flow and really what considerations you need to take into account when forming your business, because it's not as simple as having your entity in some kind of a free zone somewhere. The question is, okay, when you have that entity, you have that commercial license, will your business partners want to do business with you? Will a bank be happy to open a bank account for that entity? What kind of a license are you getting, right? Because we don't want you to end up with a license from, the box of cornflakes, and then you say, okay, I've got a license, but actually it needs to be, the license is the initial stage, it's not the end. It's the initial stage of your business journey, so it needs to serve you. And believe you me, sometimes those licenses that are quality and of lower quality are priced at the same level. It may actually not cost you any more to choose the most appropriate free zone. Well, free zones in general, apart from Abu Dhabi Global Market and the Dubai International Financial Center, have to some extent their own regulations, but their regulations are always subject to federal law of the UAE. Any disputes involving free zone entities outside of ADGM and the DIFC will be heard by local courts. So Dubai onshore, Abu Dhabi onshore, Northern Emirates onshore, which is Sharjah, Ajman, etc. When it comes to Abu Dhabi Global Market and the DIFC, they only govern civil and commercial law, so they wouldn't have family law relations, for example. There would be no criminal law and no anti-money laundering on its own. Each of those free zones has anti-money laundering legislation, but that legislation is only part of a larger scheme of things. Onshore legislation, federal anti-money laundering statutes really underpin that. So if somebody commits a crime in the DIFC, that crime will not be then looked into by DIFC courts or DIFC law enforcement. There is no DIFC law enforcement. This is the stage at which Dubai police or prosecution would get involved. So it goes back to that. Also, if you think about, divorces, custody of kids, things like that, they are looked at from the onshore perspective, no free zone legislation. If you've not heard about the DIFC, It's an interesting free zone, highly recommended. I think Dubai Media City for your purposes, Dubai Internet City in general, there is a huge cluster of free zones that are regulated by Dubai Development Authority, DDA. The DDA used to be called TCOM, that was years ago. They actually changed their name and structure, and they look after a number of free zones. They have a lot of flexibility. So DDA as a regulatory authority, and even on their website, you will see they mention free zones that they look after. Those are really, I think, a very interesting and quality portfolio. Little bit yes on ADGM, but we've actually covered a lot already. One of the things that we're mentioning here, no restrictions on capital repatriation in the context of ADGM. Well, that's true for the UAE in general, right? So funds can come in and leave the UAE freely. Of course, if they go through banking channels, every receiving financial institution is going to then, verify, right, the channel of flow of that cash. But really, the good news is big amounts can come in and leave. There is no limit on how much can be transferred at one go, one day, etc. So the central bank of the UAE is very relaxed here. One other free zone that I thought would be worth mentioning here is Jebel Ali free zone. Jebel Ali is often used for trading companies, but it's not only suitable for those. There are a number of different activities that can be conducted through that Jebel Ali framework, so might be worth it. Tax very quickly. I think what I've already mentioned to you is the key thing. I wanted you to remember that, free zone doesn't mean no tax. It may mean low tax liability in your specific case, but please assume 9%. And then if it turns out you don't have to pay that 9%, amazing, right? There is an amount that's actually exempt from tax. So if there is if you have the net profit of 1,000 USD equivalent, right? It's like 365, I think, thousand dirhams. Then at that stage, so if you go up in terms of your net profit, this is when actually your tax liability may kick in. But if your net profit has been less than that, less than $100,000, then you have no tax liability. There is no tax payable. You still have to make tax return every year. No matter your legal form where you are, tax return is there, but not every tax return will mean there is tax payable to federal tax authority. Some of you who know, there is a Emara Tax, that platform that authorities have, so pretty much everything is done online. Employment is, on one hand, actually there is a lot of protection of employees in comparison to other countries in the GCC. It's a completely different world. So, if you hear stories about some other states, then the UAE, that's not the case. There is a lot of protection, there is gratuity, there is leave entitlement, and it's not only about what the law says. Actually, it's much more about enforcement. If something happens, then the Ministry of Human Resources are available. They take complaints on employers. In some cases, they put travel bans on managers of companies that have committed breaches of employment law. So really, employees' protection is also very effective. IP, yes, very well protected. I'm not an IP expert, so I will keep it at that. AML and anti-bribery regulations, these are quite important. You may sometimes come across a PRO, so somebody who runs around and gets some errands, who will say, okay, well, you know what? If you want this license to be done today, that's going to cost 500 dirhams. But no, 5,000 dirhams. But if you can wait 3 days, then it's going to cost you 200 dirhams. And then you say, what is different here? Is it your service No, 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 you know, it's a special fee for Mohammed. Like, what special fee, right? So we need to be careful with special fees for Mohammed. None of that is permitted. I think, you know, there is none of that. There are situations where authorities know someone, and because of the relationship, they will do things faster. So I'll give you an example. If a client of mine needs something notarized, then there is no queuing at the notary's office. Even if they're not a resident here, we essentially just, you know, go to the head of notary's office. I say, okay, at 12, would it work? I walk in with a client. We show our IDs and we leave. It's a five-minute job, but that's not related to any type of, you know, funds or favors involved. It's essentially relationship only, nothing else. Now, I think I would keep it at that because there will be the Kingdom of Saudi Arabia very well covered. Just one slide. There are a number of countries in the region. They may have some opportunities, but the UAE and the Kingdom of Saudi Arabia continue to be the biggest players. They really they develop very quickly. They move fast. Their authorities take decisions faster. The two countries' rulers want to make sure that there is huge progress, but there are other opportunities as well. And here, surprisingly, Kuwait that used to be very quiet. Lately, there were some new pieces of legislation enacted. So even Kuwait is starting to move. And on that note, that's all I wanted to share with you today.